Thanks, Sane, and good afternoon once again to everyone that's joined us today as we unpack the investment case of yet another small cap company listed on the Johannesburg Stock Exchange. Now, today we get to meet and engage with the executive management at HomeChoice, and that is Executive Chair Shirley Maltz, Group Finance Director Paul Burnett. We've also got Retail CEO Chris de Wilt, and someone I'm sure investors will have plenty of questions for this afternoon, Financial Services CEO Sean Wibberley. Now, before we kick things off today, let's quickly run through some house rules as usual. The session has been broken down into two parts, which will allow for our participating investors and potential investors to get in their pressing questions. We will get those answered at the interval, so you can drop us your name and your question in the chat, and we will engage with those during the interval. And I think with that, we can get into it. Thank you so much for making time for us, HomeChoice team. I'm assuming everyone is in Cape Town this afternoon.
No, two of us actually are in Mauritius,
okay,
and two of us are in Cape Town.
Okay, Maz. Shirley, I think we can start the conversation off with you, and I think it's relevant for us to start off here. How has the pandemic affected the HomeChoice International and its operations in, say, the last 18 months, specifically your retail and FinTech divisions?
Thanks, Ntokozo. I think that I have to start with our staff. I think as with our country, we're both Mauritius and South Africa, you know, from a staff perspective, there have been a lot of mental health issues. We've actually lost staff members. People have been sick. So I think that's been a big issue for obviously for us as a country and for our staff. Another big change for our staff has been work from home. We've had to pivot to working from home completely in the lockdowns, and then we're now starting to work more of a hybrid model, and that's obviously a big change for us across the organization. And then for our customers, obviously she's been affected by the lockdown as much as we were, and the same sadness or tragedy in her family or his family. And then the lockdown affected our demand because we were completely closed over times. And then one positive that I think that has come out of it has been a real acceleration to digital adoption within the country. So those are probably the big drivers: the human tragedy, demand, impact, and then acceleration of digital.
Now, you just touched a little bit on the customer, and customers have always been at the core of the group strategy that focuses on 5 key areas enabled by technology to maximize those shareholder returns. What are those key areas, Shirley, and how do they reflect the modern African consumer also dealing with issues such as the COVID-19 pandemic?
If I can answer that question by just going one step back, if you don't mind, I just want to talk for a little bit on who she is.
Yeah.
So our customer is the urban African woman. So if you speak to anyone in our team, we refer to her as her because 80% of our customers are women, just under that in the financial services business. So when we design products with her in mind and her lifestyle in mind and her family in mind. So that for me is the most important thing. And, you know, her average income is about 11,000 Rand. She covers the demographics of South Africa. And from a financial services perspective, we've got about 400,000 FinTech customers now, and we've got about 750,000 retail customers. But going back to your actual question then, so our strategy, first and foremost, it starts with the product. So she's buying a product from us, whether it's a physical product of bedding or a credit product, because she loves and wants the product. She's not concerned. So it's innovation ultimately that drives her interest in the product, and whether she responds to the product or not. So innovation around the product is our first growth vector. The second growth vector is data insights, and how that drives. So I actually just want to, I'm finding the slides a little bit distracting. I keep losing so I'm going to make you big on my screen so I can talk to you. The second growth vector is data insights, and that speaks to how we use the data to inform our decision around her, whether it's an origination strategy around acquisition, for what product to best offer that's going to best suit her needs. So data insights is our second growth strategy. The third is Mobi first, or digital first. And for us, when we speak about digital, we're focusing on her handset. We see her handset as being, rather than a fixed line, as being the most important channel to win. And obviously for us, that drives efficiency and adoption, as I said, from a customer perspective. Our fourth growth is diversification. So if you look at us over the last 15 years, you know, we were a retail business. We started a loans business. We've now got an insurance business. We're moving into payments. So as we offer our customer base more products and diversify across products, we are leveraging the customer base through her loyalty to us and her positive experience. And that brings me back to the customer who, as you said, when you asked the question, she's at the center of our strategy wheel. And we put her there because it's her experience ultimately, and how we treat her, and how simple all of our platforms are, or how easy it is or transparent it is to engage with us, how frictionless those journeys are that ultimately drive her loyalty and then her wanting to continue to shop with us across one of our businesses. So that's our strategy as it stands.
Sean, let's get a little bit into the numbers and let me pull you in here a little bit. Your FinTech division performed exceptionally well in the 6 months ending June, with loans disbursements doubling and insurance premium increasing 40%. Revenue growth also realized a 15% jump, contributing more than 2/3 to interim trading. Now that's up levels of about 30 to 40% prior the pandemic. Could you tell us a little bit about where the major growth came from? Was it the new customers, products, or a combination of both?
Yeah, thank you. Look, firstly, last year during the COVID pandemic, we had to rein back our disbursements across the group, in retail and the disbursements in the lending group. And while we assessed the situation during the hard lockdown period, and we did this primarily in the lending business to conserve cash as a stance to buttress the group against the uncertainty of the pandemic. Because you'll remember what it was like in March, April last year. There was an incredible amount of uncertainty in the market as to what was going to happen. And we were fortunate. It's one of our key strategies is to drive the digital engagement of our customers. So we are fortunate that most of our customers, 90% of our customers, are on smartphones and engage with us digitally. So we were able to communicate with our customer over that time and pick up more data from her as to how she was contending with the COVID pandemic. And we learned more and more about our customers by interfacing with her digitally. Our credit models were enhanced to deal with the sort of a changing landscape that we were in. And then we were able to start increasing our disbursements very carefully, meaningfully at the back end of last year. And with confidence this year, in the first half of this year, we grew our disbursements, as you said, by 100% up on what we had done during the hard lockdown last year. Now, what drove that? Firstly, there was confidence in being able to do it smartly. In other words, with good credit policy in mind. The second was we had spent a lot of time digitizing our customer base. So the existing base, 92% of them re-loaned with us digitally. So we were able to quickly get customers who are our existing customers to re-engage and to take the credit that we offered. And then what's really pleased me is last year, we increased the proportion of our new acquisition that came from digital sources. So 65% of our new customers took up loans with us end to end. So from offer all the way through to disbursement digitally. And a growing trend of ours in the last 3 years has been soliciting customers outside of the HomeChoice group. And those customers we do almost exclusively digitally by linking our systems through our API to various affiliate loan originators who share leads with us, and we then convert those leads into loans. So last year, the first half of this year, we grew our customers very nicely, so about 40% up on 2019 levels. So if you want to choose a real base year, go back to the year before COVID, which was very compelling. The performance on those new customers was well in hand, and you can see in that graph on the screen there, the vintages at pandemic and pre-pandemic levels. And we managed the disbursements of new customers to about 20% of the mix of our total disbursements. So putting the chief amount of our disbursements to our very well-known existing customers, for which the credit performance is even better than our new business. And that's how we were able to grow it. Our customers' affinity with digital, the fact that we could offer her digitally, safely, quickly, and with risk models that allowed us to offer credit that she could afford and that was suitable for her circumstances.
Just a quick reminder to everyone, we are heading to the interval, so please do get your questions in the chats. This is a great opportunity for you to get those answers directly from the management team. Sean, I think with everything that you've just put on the table now, you know, it gives a clear picture on the steps that you took as HomeChoice to obviously navigate the pandemic. Now, with FinChoice being such a large component of your business now, what is next for FinChoice? You know, post-pandemic, now that it's kind of part of our normal, what is next for FinChoice?
Yeah, well, Shirley outlined the key focus areas of the business, the 5 key strategic pillars of the group. And within the FinChoice business, because we are so digital already, 90+% of the existing customers have signed up for our Mobi platform. We're going to be building on top of that platform to grow the customer base, leverage the data we have on the customer to make informed, good decisions, and then to diversify our product set from the types of loans we currently have into a broader swathe of loans, and I'll touch on that in a second, and to do a lot more in the insurance space, which I'll also touch on. So in terms of growth in the lending space, we currently have term loans and a very well-liked Mobi Money product, which is a short-term facility that customers can take small amounts of money against using her phone. We found that to be very, very highly engaged with customers. Over 70% of all of my lending customers have signed up for our Mobi Money wallet. And so one of the key things we're going to be doing is enhancing the functionality of that wallet so she can get the credit to populate the wallet and then give her different ways of extracting value out of the wallet. So rather than just putting money in her bank account, she'll be able to make payments at retailers who have QR enabled, have QR codes. We're going to be integrating with retailers, online retailers initially, so that at the point of sale, she can choose to pay to make her goods purchase using our credit at the point of sale in real time. We are going to be exploring virtual credit cards, so a virtual Visa or MasterCard, which the customer could top up with her Mobi Money wallet and then spend at any merchant that accepts a Visa or a MasterCard. So that is a very exciting next step in the journey of that wallet. We are also looking at offering credit to small businesses, and chiefly those businesses who are online businesses that might need a line of funding in order to capitalize working capital, to fund working capital. And we'll be building a product that allows us to lend to those merchants. And those same merchants will be then leveraging our ability to do point of sale credit for customers. So that's my next steps in my lending sphere. In insurance, we at the moment primarily run a funeral business where we sell funeral products, which is a very well loved and well understood product for our market. And it's done very, very well for us. About 45% of all of our loans customers have opted to take a funeral product with us. And we're going to diversify those products into other life products such as personal accident. And very exciting for me is short-term products such as device cover or extended warranties, which we will be able to curate and sell to customers of those merchants for whom she's buying goods that might need cover, that we can then offer her as well as the credit. And lastly, we're going to be reskinning our website to make the user experience even richer, and migrating more and more of our customers onto an app and away from the web Mobi site as those customers buy smartphones and are able to adopt an app, which will give her a richer, faster, and more secure experience.
Now, Sean, it seems like you really do know your customer, because I think that innovation is innovation that really makes the urban African woman's life so much easier. Now, before we close this first session, I think let me pull you in here, Chris. So as I was preparing for today's session, I couldn't help but reflect on a younger me, you know, first entering the workforce, trying to make my one-bedroom apartment a home. And even back then, you know, as Sean had said, you had already started to make your move to digital. This was 8-10 years ago. But the business has really evolved over the last year, hasn't it, Chris?
Yeah, thank you very much. I think the host stopped my video, so if the host can put my video on, that's if you want to see me. Yeah, so thank you very much. Can you see it? Okay, cool. Yeah, I think over the last few years, we've tried to become an omni-channel retailer, and our intention really is to curate our product and our offer that we can offer our customer a preferred engagement model with us. And by starting to focus more on digital and the omni-channel experience, we are also catering for our customers' change in needs. And we believe at the heart that we should keep a seamless customer experience between the channels and continue focusing on how we combine, you know, digital in our CX journey. Can you hear me fine?
Yes, we can hear you perfectly, Chris. Thank you.
Okay. And yes, and I wanted to add, you know, we would want to be a one-stop shopping destination. So from easy navigation, where our customers can browse and shop from the comfort of any location, into a wide range of curated brands. So we've got over 200 established brands that our customers can choose from. And then, you know, engaging with rich content, providing our customers with relevant visuals and keywords. That's important from a customer experience. And then our customer can go to track their order through the convenience, and then from a collection and payment perspective, easy, seamless payment options. So that's really what we've been working on to develop a one-stop shopping destination.
Chris, you should be able to turn on your video for this next question. Now, the retail business has historically been a major contributor to the group, but we did see it lagging behind a little bit this financial season. Could you paint the picture of what your retail business is currently looking like? Are people picking up the HomeChoice catalog?
Yeah, so I mean, the retail performance remains challenging in the overall market, but we've started to make some real good progress on our 5-point recovery plan. And our 5-point recovery plan was really centered around our merchandise range. Secondly, to grow our customer base by using data-driven decisioning models and drive new acquisition. Re-looking at our credit offer for our customer, resetting the cost base, and then consistently driving a digital and CX journey. Our customers do remain loyal, and our existing customers have been a focus for this year. And also, we've had to be slightly more conservative on new credit account acquisition. So from an overall health of point of view, our existing customers are coming back and they're liking the product. And our curated product still appeals to our customers. And the great thing about our catalog and the website is that our customers can start their dreaming and their engagement and then go into a purchase mode from the comfort of their home or whatever convenience they want.
Now we are at our interval. Chris, I will be coming back to you after our questions. We do have some questions that have come in. And the first one is from Pabalo Mayele. I'm sorry if I pronounced your surname incorrectly. And the question there is, are there any plans in the future to have the communication, say, for example, on the website to be in other South African languages? And then another question from Tobani is saying, I'd like a little bit more elaboration on the small business funding. It sounds quite interesting. I don't know
so
if
maybe
Shirley, you want to take, yeah, sure.
Yeah, maybe I can take the first one, and then Sean on the small business funding. Yeah, I think the first one, on the languages at the moment, our website is still, it's still in English, but where we do engage with our customers in their language is when we have an engagement with them on voice and sometimes chat. But I think for now, the website remains, but we definitely do offer that to our customer when we engage with them over voice or in chat.
Great, thanks, Chris.
Yeah, thank you. So regarding elaboration on small business funding, so we have a couple of ideas that we're going to be exploring in this space. The first is that we know that a reasonable percentage of HomeChoice customers are self-employed, either as their full-time job or as a part-time job to supplement their income. And so these small informal traders and small businesses are people for whom we have good credit information because they've been paying off their HomeChoice account and maybe have a personal loan with FinChoice. And we're going to be approaching those customers and offering them credit based on our understanding of their personal behavior towards credit and seeing if we can help finance their trading. And the other is that I mentioned earlier, we are going to be offering credit at various online retailers, that small online retailers that are looking to have a credit partner at the checkout. So the customer would buy goods and then check them out and pay them for them over a deferred period of time. Those same merchants who we have a relationship with, we will be approaching them to see if they would like to borrow funds from us for their business needs.
And Sean, I don't know if this next question will probably be targeted to you because it links to kind of the answer you've just given us. It's a question from Moketi Masai, and they're asking what makes FinChoice's loans more appealing or accessible than those offered by the traditional banking system?
Yeah, that's a great question. So when we started this business 15 odd years ago, we obviously did so in the backdrop of African Bank and Capitec and other big lenders being there. So how could we compete against such big forces in the market? And the focus was to be very, very, very customer focused. Shirley mentioned that 80+% of our customers are female, and the focus in the retail business, which was imbued into the FinChoice business, was to have a real dedicated focus on the female consumer, and to simplify lending, to make it transparent, to make it to give the customers a sense of security that when we offered credit to them, that they would be approved. And we could do that by understanding her HomeChoice behavior and therefore making personalized offers. And what we've done now with digital, which really enables us to mine the data and to curate personalized offers to our prospects and our existing customers. So take the prospects, which are people we would offer brand new loans to. We don't just say, come to FinChoice and get a loan of up to 50,000 Rand. We say, Mrs. So-and-so, based on information we know about you, here's a 7,000 Rand curated loan that you can pay back over 12 months. And when she applies, there's a very good chance that she'll be approved because we've used her data with her permission to curate an offer for her. And obviously our existing customers have a lot of information on them, and they get very, very bespoke offers. And then they conclude these offers 24/7 on their smartphones. And we spend so much time on the CX, the customer experience of how she engages with the phone, how she understands the credit, and make things very crystal clear, easy, and reassuring. We believe that's a competitive advantage and why we've been able to grow in the market.
Thank you so much, Sean. Now,
could I add to that?
Sure, Shirley.
So there's just one thing, I'm a mum and I work, and obviously most of our customers are mums and they work. And I think that if you're a working woman, you become so time pressed And for me, if I compare us to the traditional banks, it's that thing of being able to sit down on your couch after you've got home, after you've done homework, after you've done the washing, after you've cooked dinner, and then you can actually buy data. You don't have to go down the road. You can buy electricity, you can take a loan, you can actually sort out your whole financial services ecosystem without having to go into a bank. And going into a bank for our customers means she's got to get a taxi into the bank, she's got to stand in a queue, maybe she's got a child with her. So it's that whole thing of thinking about the customer and actually what it's really like to be a working woman and to be earning 11,000 Rand and to be a mum and all those things. For me, that's very important, that we think about actually trying to make her life better. And that's what I think we do differently to a traditional bank.
No, thanks for that, Shirley. Thank you. And I trust that answered the question. If there's any more questions, please do get it in during our second session. Remember, this is an opportunity for you to really get the information about the company to be able to make better investment choices going forward. So please do put your questions in there. Chris, I think I'll kick off the second session, coming back to you, sticking a little bit with the retail side. Now, HomeChoice is the largest home shopping retailer in Southern Africa, selling everything from homeware, merchandise, and bread to financial services. And I know we have been speaking about being your biggest company, your biggest customer, but will we be seeing any products for men in the near future?
Yeah, so I mean, Shirley has given you a quite a good depiction of our customer and what she looks like. But although our focus has been on our female customers from our heritage, roughly about 20% of our customers are men. I think for now, we are focusing on our 5-point strategy plan that I mentioned. 2021 is the stabilization and implement, and then starting to deliver the turnaround into 2022 and 2023. But in future, we would really like to cement our positioning in the local market, helping you create the home you love. And that could include, things which are more appealable to a broader market. But we still believe, at our heart, there's still a lot of market share that we can take in that space. So for now, it's sticking to our knitting and focusing on our 5-point plan. We should start seeing some nice green shoots, into the next year. And I think we will always focus on that curated offering and providing a seamless customer experience.
Paul, let me bring you in here. With your financial services arm thriving right now, it is still important to keep in mind the current environment of tight credit policies that we are in. How are you then mitigating that in your cash collections and cost controls? And how is your debtors book looking like at the moment?
Great. Thanks for asking that. And this is something that's core to our business and that we manage extremely closely. I think Sean has spoken to the FinChoice strategy. So they will continue providing low value, shorter term loans as compared to some of our peers. And we'll also continue with our low and grow strategy. So that's key for us, is to get an understanding of a customer and how we pay, and then to be able to enhance that relationship over time, as we start to understand each other more and more. So firstly, that's the strategy from a loans point of view. Secondly, a point I'd also like to call out that Shirley and Sean have spoken to is, the loans business and the retail business are driving digital strategies. And what those allow for is firstly digital collections. So all of the FinChoice collections are done using the digital means. So that makes it easier for our customers to pay. and it's something that we're able to monitor and control very closely. But secondly, in terms of the marketing, Sean's also spoken to our ability to then have targeted growth as well, which we're able to do with our customers on her phone. So, I mean, with those strategies in place, what we're seeing is with the growth that's come in the first 6 months of 2021, the FinChoice book is actually at its strongest levels in the last 5 years, let's say. So we're happy with the performance of our books. And yeah, as you've called up here, from a cost control point of view, it's key for us to have the right cost base in place. So Chris on the retail side has taken a very firm view of the retail cost structures going forward. And secondly, with the FinChoice business being a digital business, as that business scales, we're seeing that benefit coming through in terms of our cost metrics as well.
Now you've kind of touched on it already, but I'm going to ask the questions anyway. Do you expect growth in your loan book to continue, and how do you plan to fund it?
So we're happy with the momentum and the scale that the FinChoice business has obtained. We're also happy with the credit risk quality that's coming through that book. So so that's looking good. We'd like to continue with that strategy. So yes, we do expect to continue growing well there. And we have funding facilities in place to support that. So yeah, that's a key strategy for me as the FD to make sure it is in place, and we're confident that we have the right funding in place to support the growth plan.
Thanks, Paul. Shirley, bringing you back into the conversation, while investing for the future, HomeChoice International has also stated that it remains cognizant of the prevailing tough trading environment. What do you forecast will be some of those risks and challenges for the business going forward?
I think, you know, we'll probably go back to your first question. So I think COVID is going to remain a risk in South Africa. So the impact that the pandemic will have on our country and obviously on our customers and her families. And I think that'll continue in terms of the fourth wave until we get our vaccination rates up. So obviously that's a risk for our staff. And you can see now what's happening globally with some other countries starting to go back into lockdown again. And you know, we really don't want for that in South Africa. I think another risk for us is Eskom. You know, we were laughing and chatting before this call started. We have solar panels that support all of our electricity, but we had some problems with our inverters the other day, and then we actually had some power outages, the first that we've had for ages, but it really impacted all of our systems. So I think for a country, Eskom is posing a big risk for us, you know, and for our economy at large. I think we all know that. I think there's political risk in South Africa at the moment with all of our, you know, from a political perspective, there's so much change. And then, you know, we've seen social unrest in August, which I think again poses a risk for us. And a lot of this is feeding into some of our economic risk around with our unemployment data. So I don't mean to paint a very gloomy picture, but there are lots of challenges that are facing us as a country, and we're quite cognizant of them, and then how it affects our customers' life, and what we can do to try and assist her in that journey. So those are the risks as we see them, and the challenges facing the business in the next. But the one thing I would say for South Africans is that we are very resilient as a nation. And we've got through much worse things in the past. So I have no doubt that we'll get through this. It's just going to take a bit of teeth gritting and pushing forward.
Just adding to that, Shirley, sorry, you know, highlighting some of the political risk and some of the unemployment, you know, the high unemployment levels that we have. You know, economic transformation remains a high priority for South Africa, and with opportunities to see more Black businesses emerge in retail, FinTech, and the digital space. how has HomeChoice really been an active citizen in that regard? I know we mentioned, funding small businesses and so on, but yeah, how are you doing your part to really drive the transformation?
Appreciate that. So I think, the first thing I wanted to do was we started an initiative about, it's probably about 12 years ago now, with drivers, where we wanted to get people who were working in the communities where our customer lives to actually do our deliveries for us. So we set up people in business who were kind of micro deliveries, and some of them now have 50 and 60 people working for them, and they drive quite a big proportion of our deliveries, but those are owned by people who were previously disadvantaged in their communities. We help them, sometimes we help them with petrol, we help them with training, computer skills, and now they are 12 years later. We have 50 vibrant businesses who help support our delivery strategy. Another thing we've done is we've got just under 1,000 sales agents who are out in the field. And again, we set them up in micro businesses, and they go and, we give them skills again, we give them training, and they go and supplement their income. Some of them will make 1 or 2 sales a month and earn 500 Rand, and others will make a significant number and they'll earn 40 and 50,000 Rand, and then have a real business with people working for them, earning commission from a sales perspective. So that's another thing that, I'm very, very proud of. We've also increased our local buy in South Africa. So going about 2.5 years ago, about 20% of our products was bought locally. That's now about 40%. And then finally, also about 15 years ago, I'm making myself sound very old. I am actually very old. We set up what we call the HomeChoice Development Trust. This is focused on early childhood development. We focus very narrowly in the sector in South Africa. We do this because we know that our customers' families are important to her, and we wanted to give back. So every year we give 1% of our profits to this development trust, and they help children under the age of 6. We help develop and set up schools. Some of the schools we just do up, other schools we build, but we've supported over 200 schools over the last 15 years, and just under about 18,000 children now have been through our schools. And yeah, we try and get them up to a point where they can actually start working with the Department of Education, and we get them registered. But that's also something that it's not exactly an economic transformation, but it's something that we're very passionate about helping our customers' children and her education. So those are just some of the things that we've done. And obviously we've got a skills within the business. We've got bursaries, skills development as a part of our staff development programs. So those are just to give you a flavor, touched on a couple of them that we do within the business.
No, that's great, Shirley. And I think even the early childhood development really is important in eventually helping to drive that economic transformation. So that's great. And I think as a final question from me, before we get into the other questions that have now come in from our investors, HomeChoice International declared an of 95 cents to its shareholders. Now that's up close to 16% on a year-on-year basis. As a final question, Shirley, what are your strategic mid to long-term goals, and what is the company investing in the near future to strengthen its investment case?
So if I stand back and I just go simply, what is it? It's tech, and people. And the reason it's tech, in order to support our growth strategies going into the future, our platforms need to be stable so that when she comes on, it's fast and seamless for her on all of our digital platforms. So for me, that's the first thing, is investing in our technology and managing the migration from some of our legacy systems into new tech. So that's the first element. The second is adding products and services to our customers, whether it's a merchant service and the business owners we were talking about, or around customer services. So adding products that she's actually going to want. I spoke about leveraging the customer base. So it's launching products like our digital point of sale in FinChoice. It's launching, more payment services that we want to offer to our customers. So, and everything that we do, because we centralize, we do have stores, but we don't have a lot of stores, it's still under 20. So because we're so centralized, everything we do is from a tech perspective. So for me, that is our most important thing. So we're just going to be developing our tech platforms and investing in our tech platforms. But Sean has touched on a couple, and it's making sure that her engagement, when she has an engagement with us, whether it's a product, a purchase, a loan, an insurance product, or it's a merchant, we want it to be really slick and a fantastic experience. And to do that, we need to invest in technology. And obviously, we're going to be investing in store rollouts and her delivery experience as well. But the majority of our investment goes into tech.
Thanks, Shirley. Well, we are at the end of my questions for this session, but I do see some questions that have come in now from our participants. And I have one from Riarabile Mokhatla, and they're asking interest rates for the loans. And we had another question come in from Pabalo. I think I'll take it two at a time. And Pabalo asks, how is your customer, sorry, let me just go back there. How is your customer base in Lesotho? Do you have any plans in your timelines to open a house there?
Go for it, Sean, you go first.
Yeah, I'll touch on the interest rates for our credit instruments. So across the FinChoice business, we've got two types of credit offer. We've got the Mobi Money wallet, which is a facility, and that has an interest rate of 17%. And then we have our term loans, which are our personal loans paid off over 12 or 24 months, and those are at 24%.
Yeah, and then I think the second question, in the past we've had sales agents in some of the South African countries like Lesotho and Botswana. But I think where we are now, again, it's first to solidify and implement, our retail business. We do believe that there's opportunity in the neighboring countries, and those customers would really like our curated products. But in the very immediate short term, we probably wouldn't expand too much into those territories.
Thank you, Chris. Sandile, I understand you did have a question with your hand raised. Please do pop it into the chat. Otherwise, I'm going to just quickly go to Mogeti's question. And I think Shirley and Sean did touch a little bit on it at the top of the session. But the question is, how has COVID and the social unrest specifically affected the physical store rollout strategy?
Yeah, maybe I can pick that one up. So, our stores are more of a showrooms, and our showrooms is an extension of the customer experience and that digital experience. So we closed one showroom this year, and we've probably paused in the areas that we want to go into, but we do see it as a strategic opportunity for us in the future. And we would start looking at that, into next year. I think the most important thing for us in a showroom is to have an extension of the experience. So if a customer of ours has an experience in a showroom, on the website, through our app, with an agent on voice or an agent in the field, we always want the same type of experience and the same type of seamless experience. And we've seen one or two of our showrooms perform really, really well. So we do think we have a certain recipe for us to capitalize on.
Thank you so much for that. Well, we have come to the end of our session, and we're actually just a minute over. Thank you so much to the HomeChoice management team for engaging with us and ensuring that we are informed investors and prospective investors going forward. If you did have any other questions that maybe you were still kind of, trying to clarify in your mind, you can share those questions with myself and Ane, even on social media, and we'll make sure to get those questions to the HomeChoice team and get those responses to you. Once again, Ane will be processing those Easy Equities vouchers. So happy and smart investing to everyone who's joined us on the call. You can get in touch with us on all social media platforms if you face any delays, or again, if you have any other questions. Myself, I'm at that AfriBiz Girl on Dogozo Kumalo on all social media platforms. With that, that's where we have to leave it. We may be able to throw in a bonus session before the end of the year, so do keep your eyes open on our social media platforms. HomeChoice team, thank you so much again. Shirley, Chris, Paul, Sean, making time for us this afternoon and really giving us the information that would make us better investors.
Thanks for your time. Thanks,
Thank
everyone.
you so much for
Appreciate it.
yours.
Thank you so much.
Thank you. Have a glorious day.